Time now for Options Corner. Joining us to take a deeper look at this chart is Rick Ducat, lead a market technician. All right, let's talk about this Apple chart. What trends have you noticed, Rick?
A chart that is turning around to the upside substantially here. We can see with our yearly percent change comparison, Apple is now only slightly below the XLK tech sector ETF, 19.6% versus 22.2%. The S&P 500 up about 13% as well. If we were to compare Apple to the rest of this Mag 7 group, they're kind of right in line with the group's total here. For a long time, they had the rather dubious distinction of being the worst performer out of this celebrated group that really is kind of the pillars of the market at this point. When we do look at Apple more specifically, our yearly candle chart shows that we have an upward sloping channel type shape here between our two white dashed lines. We recently topped out near 277. However, we did not make a close that was anywhere near that level until 2 sessions ago. Now that is the level to watch to the upside for resistance. In terms of support, 265. Old high, subsequent low. That is the first area that stands out to the downside. When we look at some of our other studies, our 21-day EMA lines up with our trend line, which also lines up with that same level near about 265 to 266. RSI still pretty high. We have backed out a little of that overbought area, but still quite a high reading, 66 versus that threshold of 70. If it were to push above resistance and push above that overbought area, that would be more of a confirmatory sign. For now, price is also remaining above this volume node that we see right here near about the 270 level. We can also see that our +2 standard deviation channel lines up very closely with those old highs. So that could be an area to watch for further resistance and potential breakout.
Thank you, Rick. Appreciate that. That's the Duke of Data himself, Rick Ducat. Now to take us through an example trade is Tom White, senior options contributor and co-host of Fast Market. When I look at that chart of Apple, it feels like this, I think I can, but a little bit of a speed bump, it seems like, with some weakness in the tech sector recently. Tom, what's the approach for an example trade?
Yeah, you make a good point there, Diane. It's not immune for what's happening in the overall market. Got good news today. It's actually being used. It's down to about 12% from those recent record highs. But at the same time, it's kind of like a safety play type of trade because of their rock-solid balance sheet, their growth that we've seen since the release of the iPhone 17. And the valuations, while elevated, their earnings have kind of reflected that the multiple needs to increase also. So I looked at a strategy, implied volatility levels. The IV percentile ranks only about 16%. So we're in the bottom 1/6 of what we've seen implied volatility over the last 52 weeks. So that gives me, piques my interest when I see the stock pulling back 12%. Good news coming out. If you want to take a bullish stance, let's take advantage of a strategy that takes advantage of lower implied volatility levels. So I went out to the December monthly option. So we've got 35 days to expiration on this one, about 5 weeks. You're giving yourself plenty of time. We're going into the holiday shopping season. Apple always does well during the holidays, Diane. So going out to the December monthly options that expire in 35 days, we're going to buy that slightly in the money 270 strike call. Stock looks like it's going to open up just about 271 here. So that's slightly in the money. It's got that higher delta. It reacts more like the stock. And then against it, because maybe we want to cap maybe some of our gains, offset some of the risks, we'll sell the 285 strike call. So a bullish $15 wide call vertical. You're going to pay roughly, if the stock opens up here about 271, you're going to pay a debit of about $6.50. There's your risk, $650 per spread that can expand, and you can make another $850 if it goes above the 285 level into expiration over the next 5 weeks. Pay $650 debit, there's your risk. Your break even, $276.50 to the upside. That's only 2% above the current share price. So you don't need a monster move to the upside on this one. And that break even, if you keep going above there, it can expand to up to $15 if we hit the new record highs here in Apple. But directionally bullish call vertical here.
By the way, Tom, love the pocket square and the blazer. I don't know if that's velvet, but love it.